National oil firm Petronas reported a 154.2% year-on-year jump in profit after tax for the first quarter of FY22 to 23.44 billion ringgit from the 9.22 billion posted in the previous year, as operating profit more than doubled following an upward trend in prices offset by higher product costs and taxation. Revenue for the quarter rose by 50% to 78.75 billion, which Petronas said was predominantly due to price impact for major products in line with higher benchmark prices. It is Petronas' strongest bottom line performance in at least a decade on the back of higher crude oil prices, with average dated Brent hovering at $102.23 BBL during the quarter. The last time Brent average breached the $100 per BBL average was in FY13. President and Group CEO Datuk Tunku Muhammad Taufik said the latest results demonstrated Petronas' disciplined delivery of its core and growth strategy. However, despite a degree of recovery and growth expected with the reopening of the economies, Muhammad Taufik says Petronas will continue exercising prudent financial management and a firm focus on reinvesting given its cautious outlook amid volatile geopolitical conditions and accelerated energy transition. In the quarter, capital expenditure stood at 7.4 billion, where domestic capex increased close to 30%, with upstream remaining a major contributor to overall capex spending. Operation-wise, three businesses comprising gas, upstream and downstream contributed to the significant improvements in PAT and revenue for the quarter. In the renewable energy space, Petronas' capacity in operations and under development exceeded 1 gigawatt. It has also signed a term sheet with Sumitomo for 100 kilotons per annum of low-carbon ammonia for offtake in 2025. On prospects, Petronas sees oil and gas prices remaining high and vulnerable with increased volatility due to geopolitical and macroeconomic uncertainties. Petronas says it will continue to strengthen its operational excellence to maximize value creation, whilst intensifying its growth and sustainability agenda in Malaysia and internationally. FGV Holdings returned to the black for its first quarter, posting a net profit of 369.2 million compared with a net loss of 35.4 million a year ago. This turnaround was mainly due to higher margins for palm products, the downstream segment, fertilizers and the logistics business. Revenue for the quarter surged 72.5% to 5.85 billion thanks to higher average crude palm oil prices, strong volumes and higher prices of consumer and fertilizer products. FGV highlighted that the fresh fruit bunch production increased to 0.83 million metric ton, while CPO production increased by 11% year-on-year to 0.56 million metric ton in the first quarter. Group CEO Muhammad Nazrul Izam Mansor said the planter was pleased to announce another profitable quarter amid the uncertainties and challenges faced by the group. He says FGV is looking to keep its positive momentum to meet the expectations of its stakeholders and achieve the targets set for 2022. Moving forward, FGV says that it will expand its fruit-producing activities, especially in the realm of fresh produce, as it seeks to support the government's food security agenda. One of the plantation giant's biggest initiatives is with the Balatna Dairy Facility for a large-scale dairy project located in the Chuping Valley, Perlis. FGV will also be bringing in more rice products to cater for consumers' needs, such as Saji Basmati and Saji Aroma, set to be launched in mid-June. The group is also targeting to produce 75,000 tons of animal feed this year, which is a significant increase from 40,000 tons produced last year, in an effort to cater for increasing demand in the meat farming industry, such as for cattle, goats, rabbits and chickens. CIMB Group Holdings net profit for the first quarter tumbled 42% year-on-year to 1.43 billion, mainly due to one-off non-recurring items booked a year ago and the recognition of the prosperity tax. Revenue for the period shrank by 19.8% to 4.74 billion from 5.91 billion a year before. CIMB did not declare any dividend for the quarter. Excluding the one-off items, CIMB said it sustained its core pre-provisioning operating profit at 2.51 billion, whilst core net profit positively grew by 16% year-on-year to hit 1.55 billion. In a statement, CIMB Group CEO Dato' Abdul Rahman Ahmad said the strong performance seen in the first quarter is a positive reflection of the economic recovery across its markets, as well as the growing momentum in all segments of its business. He says that CIMB's capital and liquidity positions, as well as asset quality, continue to strengthen, and the bank is encouraged to see positive traction in loan growth as the strategy to reshape its portfolio is starting starting to bear results. Abdul Rahman also points out that ongoing cost optimization efforts have contributed to lower operating expenses. He says that CIMB is expected to spend $1 billion in FY22 to drive further digitalization as well as improve technology and operational resiliency. The bank says it is optimistic of an improved financial performance in 2022 in view of business expansion on the back of anticipated regional economic recovery. MMB Holdings returned to profitability for its fourth quarter, posting a net profit of 391.75 million compared with a net loss of 4.69 billion reported a year ago. In the previous year's corresponding quarter, MMB's numbers were dragged mainly by one-off exceptional items totaling 4.77 billion that included the 2.83 billion settlement related to 1MDB. Revenue for the quarter dipped slightly to 1.12 billion from 1.13 billion in the same period last year. For its full year report card, AMMB recorded a net profit of 1.5 billion compared with a net loss of 3.83 billion the year before, while revenue improved by 2.5% to 4.66 billion. Group CEO Datuk Sulaiman Muhammad Tahir said that the bank managed to end the year on a high, with net interest income increasing 11.6% year-on-year on the back of 6.5% in loan growth, while net interest margin was higher at 2.05%. Sulaiman adds that AMMB is pleased to propose a final dividend of 5 cents per share, which he says is a testament to the group's commitment to sustainable growth. He says that AMMB will continue to be committed to its resilient capital building via profit accretion and its ongoing divestiture of non-core assets. On its prospects, AMMB says that it expects the central bank to revise the policy rate by another 1 to 225 BPS hikes in the second half of 2022. The bank says that while the country's headline inflation remains manageable, a rate hike by Bank Negara would help to mitigate the potential interest rates differential. This, AMMB said, would provide support to the ringgit versus the US dollar and in turn provide some cushioning to inflation, namely coming from the import segments. Transport Minister Datuk Sri Dr. Wee Ka Siong says his ministry is open to an investigation into claims of giving bribes in public transportation infrastructure construction involving a MRT project, Petronas reports. He said the Ministry of Transport will give its cooperation and always practice transparency and not support any element of misappropriation in whatever project related to the ministry. Wee says that he is following the development and adds that MRT Corp has also stated its willingness to be investigated over the allegation. The minister said that anyone involved will face action if complaints have been lodged and in the meantime called on the public to not speculate on the matter until the authorities have completed their investigation. To clarify, it had been reported that the French authorities are investigating allegations of cheating and corruption that happened a few years ago in an MRT project worth 692 million ringgit. In a statement, Prasarana Malaysia said that it too viewed seriously the reports, which it said involved both the MRT and LRT projects. Prasarana said that it would liaise with the Malaysian Anti-Corruption Commission to get an accurate picture before taking follow-up measures. Prasarana also urged the public not to speculate on the matter.